Hello and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me is Cheryl D'Souza. And viewers, this is the show where you get all your stock-related queries answered by the experts. So do get ready for that. But before we come to taking all your stock-related queries, let's have a look at what the markets are up to. Cheryl, after the sharp fall on the Friday session, the only respite is at least Nifty is holding in green right now, but Bank Nifty, not the same case.
I don't know whether we can say we are holding on to green and be a little happy about it. Srishti, very good morning to you. And the only reason why I'm saying that is the fact that we did have a much stronger opening. Right now, we are giving up those gains on tick-by-tick basis. So right now, you have Nifty that slipped below the 17,000 mark. This is after holding above the 17,000 mark for the most part of the morning. That has been little over an hour of trading coming in for the benchmark indices. But talking about Nifty Bank, that one has slipped into the negative territory. The advanced decline ratio now is tilted in favor of the decline. So yes, we are seeing some sort of pressure built in for the markets. Let me take you through the list of gainers at this point in time. You have Reliance Industries that's holding on to good gains, about 1.5%, and that's the one that is actually lending the support to the benchmark indices. Divi's Laboratories, on the other hand, holding on to good gains. Apollo Hospitals, HDFC Life, and Dalco are the other set of gainers in today's trading session. Talking about the flip side and the losers, there's Adani Enterprises, Adani Ports, Mahindra & Mahindra, NTPC. They are some of the other counters that are actually declining in trade today. Remember that Mahindra & Mahindra, you have a downgrade note that's coming on that particular counter, and not just Mahindra & Mahindra, you also have Escorts Kubota. You have Bank of America that has come out with a note with a downgrade on both of these tractor makers. Talking about the sectoral indices, and it's the broader markets that's taking a knock in today's trading session. Take a look at the small cap index in particular, because the small cap index is the one that is actually seeing a decline of about 1.5%, sorry, I beg your pardon, 1.2% as we speak at the day's lowest point. Realty index is under pressure, 0.9% downtick coming in for realty. Auto as well under pressure in today's trading session. But on the flip side, you have pharma index that's holding on to strong gains in today's trading session, and that indeed is the topic of BNSN Lens, isn't it, Srishti?
Well, yes, absolutely, Sharon. And if we see out of the 10 top Nifty 50 companies today, 4 are the pharma names. So Nifty Pharma is definitely seen to be making a comeback. And onto the radar of Credit Suisse, the company is Sun Pharma, specifically, where they have given an outperforming rating and has set a target of close to 1,100 rupees for this particular counter. So the on to Buy Now, Sell Now lens today, the focus is right there. And Pankaj, who tracks this sector very closely, joins in with more details on this brokerage note. Take it away, Pankaj.
Absolutely. When we just look at Credit Suisse and Sun Pharma, they have upgraded their rating to outperform. This comes in after neutral rating, and their target price is 1150 now, which means the upside that they believe now is close to about 180 to about 190 rupees. Specialty platform has emerged as one of the key growth drivers, and that, according to them, is one of the key things to watch out for. Company targets to double its specialty sales over the next 4 years, and that they believe will lead to a lot of margin expansion. In fact, talking about margin expansion, they are saying that India business valuation provides the downside, but at the same time, when you just look at the margin picture, the company is entering into the phase where capex is going to come down and margins are going to increase, and that's their main key call. As specialty sales increase, capex over there reduces. That is something which will enhance their margin, and that is something which will re-rate the stock. 1150 is the target price. It's a new upgrade which is coming in from Credit Suisse on Sun Pharma after being neutral for really a long time.
All right, thank you so much for that, Pankaj, for getting us the latest note that's coming on Sun Pharma. That's Credit Suisse, who is bullish on Sun Pharma. But if you look at the entire pharma pack today, they're actually a buzz. Be it Lupin, be it Aurobindo Pharma, be it Divi's Laboratories, for the matter of fact, all of them are saying good uptake. And also add to that list, you can also see some of the hotels names also, I beg your pardon, hospital names also seeing a good uptake in today's trading session. Let's bring on board our experts for today. We have Hemen Kaparia as well as Ashish Maheshwari joining us on the show, and we'll ask them what they make of the rally or the flavor returning in the pharma space. A very good morning to you, Hemen, as well as Ashish. Thank you so much for joining us on ET Now. And Ashish, on to you, coming first to you on the pharma space. 2022 you could say it was a washout year coming in for the pharma sector, given the fact that it saw a sharp rally or during the COVID-19 phase, and then all that rally kind of fizzled off. They were in consolidatory phase, or rather in downtrend over the last 1 year. But now you are seeing some sort of an interest pick up in some of these pharma names. A lot of positive developments also taking place, barring Sun Pharma reporting about their ransomware group and the attack on the IT systems of theirs. But apart from that, how is pharma sector looking like, and what are your topics?
Yes. In fact, we have seen this report of Credit Suisse. Before this, Jeffries has also given a target of 1200 in Sun Pharma. So overall, some bottom fishing or bargain hunting opportunities are there in pharma sector per se, and Sun Pharma being a industry leader, most of the money will go there. Number one. Number two, if you see even pharma indices just 400 points away from 52-week close. So from 13,900, what we saw in Nifty Nifty Pharma, it is now at 11,900 kind of levels, and low was 11,540 kind of levels. So a lot of value buying is now going to emerge here. Again, if you see fundamentally what is changing in industry, first of all, whatever the supply chain related issues were there related to China, they are sorted out. Second, the prices of raw material have really cooled down, which is giving a good flip to these companies, because Indian companies primarily work in generics kind of business. And the way inflation is going up in US and European market and even in India, the most of money most of people are buying, in fact, the generics drugs, which are almost 80-85% cheaper to branded one. And here the money is. So in my view, this sector which will continue to do well, and stocks like Lupin, Dr. Reddy, Sun Pharma, they will lead this rally. And I'm bullish as far as this sector is concerned. And again, as a defensive bet in volatile times, so pharma will continue to do well in my view.
Is expected to continue doing well as per Ashish. But Hemain, coming to you, a very good morning to you. Like Ashish was just highlighting how Nifty Pharma is making a comeback and is now seen to be decisively crossing that 11,800 level, which was somewhat a hurdle. What's your take on the Nifty Pharma? Are you also bullish on the Nifty Pharma as an indices, as well as any of the stock picks from the Pharma pack?
A very good afternoon to you, Srishti. Very good afternoon to Shadi. Thank you for having me on the show. The way I see it, Srishti, it's more of a bounce. If you look at the Nifty Pharma Index, we've been down for 22 weeks in a row. So frankly speaking, we've come off from 13,700 to 11,550. So we've virtually fallen off a cliff. And I'm saying this of this segment. If you look at the all-time highs which came in last year, last to last year probably, we've come off from 14,900. So frankly speaking, we have been under pressure for 1.5 years now. So currently, one, we are oversold. Two, the daily charts seem to suggest a clear bounce coming in. There's some positive divergence also coming in, and a higher top, higher bottom. So the way I see it, after 22 weeks of a decline, not very surprising that the bounce is coming in. Having said that, the bounce is not yet over. It could get even more acute. So looks good. Further upside seems to be on the cards. But if I take a slightly longer term point of view, I still think it's more of a recovery than a rally. So if you have a 4 to 6 week point of view, I guess the outlook does turn positive. But if I have a 1 year point of view, nothing changes. The long term setups have been disrupted, so to speak.
That's the technical analysis of the entire Nifty Pharma space, and what Hemant was also saying, that they have been actually in an oversold territory as well. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get to answers for all of your stock-related queries. You can connect to us. We are live on Twitter, Facebook, as well as on your TV screens. You can write to us on the WhatsApp number that's flashing on the top of your screen. Do mention your name every time you send us a query. Also mention the stock name that you're looking to invest in. If you've already invested in the stock, mention the buy price, the quantity, as well as the time horizon, because that will help our experts help you better. So before we kick start with the queries, let me come to you, Ashish, and ask you the most pertinent question. What should retail investors do in such a volatile period to keep their wealth protected?
So like this movie came RRR, I have also got 3R that investors should do today. My first R is reduce F&O positions. Like government also want that you should not trade too much in future and options and just incur capital losses instead of making money. So reduce F&O positions. Second is reduce intraday positions because this is not the same year which it was 2022 where you were making a lot of money by doing intraday trades. Here it's very volatile market, and the more you'll try to time the market, you will lose more money. So avoid intraday positions. And our third R is reduce leverages. So don't take too many leverages in a small cap and mid cap because we don't know for how long this lull in phase in a small cap mid cap will continue in this year. So three reduce from my side to preserve your capital.
Even Ashish is actually sticking to the RRR theme, just like Rajesh Agarwal, just like Kunal. I believe all of you are only watching that one movie, Ashish. What about the rest of the other movies? You've not taken the name of Pathan also.
Yes, I think let time come. We'll discuss that also.
I'll keenly await for that one. Shrishti, over to you.
Well, yes. So that's actually great to see, Cheryl. Maybe the viewers can't win an Oscar with that, but definitely they can keep their wealth protected by following all these 3 Rs. But let's move on, viewers, and let's kickstart taking all your stock-related queries. And the first question that I have is coming from Answer. And Ashish, let me come to you because this is the question is on Tanla Platforms. He's holding 40 shares of this counter from a price of 650 rupees. He can hold this counter for the next 2 years, but since he's at a loss, what should he do now? Hold on or book losses?
I suggest you book losses because nothing is going in favor of Tanla as such because the kind of competition they are getting from other players in same field. The niche that Tanla was enjoying few years back has gone. So instead of this, I'll suggest you buy Root Mobile Limited, which is now industry leader here. Stock is much stable and performance-wise also they are doing very well. So Tanla sale, Root Mobile, you can swipe your shares.
All right. This next one is coming in from Anant Nayak. He's writing to us from Bangalore. He has 100 shares of Talbros Auto at a price of around 397 rupees per share. He wants to hold it for the next 3 years, but is that the right call? What's your take on this one, Ashish? He also wants to know whether he should continue to hold or exit.
So Talbot Auto is again slight underperformer stock if I see overall auto ancillary pack. So my suggestion will be to exit from this stock. Instead of this, I'll prefer a stock like Atul Auto, which is directly into three-wheeler and coming out with good products in EV segment also. The stock has also corrected quite a bit in line with other automobile plays. But I think whatever the losses they have incurred in the last few years, this is going to be recovered soon in because their EV vehicles are going to get very good response in my view. So Atul Auto is a buy, sale Talbros Auto.
One more auto query coming, but this one, let me take it from Himain. He wants the question is from Abhijit Himain, and he wants a medium-term outlook on Escorts Kubota. This particular counter also saw a downgrade coming in from BofA, but Abhijit is holding 50 shares at an average price of 2002. What to do now? He can still hold this counter for a next quarter maybe. What's your advice?
I'd suggest he'll have to. I think he'll have to hold more than a quarter because if I look at the charts, this stock might just have exhausted its entire move from 420 to 2350, and this is a 2.5 year move history. So frankly speaking, it's taking a breather, and it's going to take even a longer breather. So 1 quarter, I would say sell on bounce because his price seems a bit far away, and the high, I'd be unpleasantly surprised if it makes a new high this calendar year. Doesn't look like.
Right, the next one is coming in from Indu, and this one is particularly for you, Ashish. She's been waiting for almost 2 weeks to actually ask you this query. She wants your view on green hydrogen theme and also good stocks in the space for that she can look to invest over the next few years. She's saying if you could give her one large cap and one mid cap stock that she can look at in the green hydrogen space.
Sure. In green hydrogen space, a couple of stocks which I can recommend you. First, in large cap will be Linde India. This is again a company doing very good work in as far as gases, industrial gases are concerned, and green hydrogen also they are having desired technology. And we have seen this stock. If you see last 6 months from 3,000, the stock has touched 4,000 rupees mark also, and gradually it will give you good returns. This is not a trading stock, but very good investment stock as far as green hydrogen theme is concerned. Another stock which I like in this space is Everest Canto Container, which is again a mid-cap stock, is known as EKC. This is a stock should be bought at 80 rupees level because this is a company which makes cylinders, and once this green hydrogen will be available in quantity, they are having ready capacity to transport that green hydrogen. So Everest Canto should be bought at 80 rupees. I think in this company's the stock has come down from 250 rupees to this level because last quarter they have incurred losses, but now this quarter onwards I am expecting very good numbers again from Everest Canto, so can be bought at 80 rupees.
Once again, coming to you, the question is from Bharat, and he is holding shares of IEX from a price of 145 rupees. The stock is not very far from its 52-week lows, but he's looking to average out this counter. What's your advice coming in for IEX?
I'm bearish as far as IEX is concerned because we have seen very static kind of quarters. If you see in IEX, another reason is FIs are continuously selling this stock. I think from 40% FIs holding till last December. In last 12 months, it has come down to come down around 24%, and most of it has gone to retail investors, which will keep on putting a lot of pressure on price of IEX. So IEX is a sale in my view. Instead of this, you can buy directly a power stock, which will give you better return. So my suggestion will be to add either NTPC or Torrent Power.
This one is coming from Sunil. He's writing to us from Muscat, Oman. He wants to know about GSFC for the longer term. He already has, no, he wants to know whether it's a good buy for the longer term at the current market price. He wants a technical as well as a fundamental view. But before I go to Ashish, Heyman, let me come to you on this one. GSFC, a good bet to take right now?
I'd suggest wait a bit, Cheryl. We've had a 4.5 month sideways movement, and the stock is on the cusp of breaking downwards. Okay, the month is not yet over. We have a couple of trading sessions left, but uh, after 4.5 months, if it breaks down and the breakdown level is at 118 and we are at 119.45, so monthly closing below 118 would sort of vitiate the atmosphere and we'd go to 107 or lower. So I'd say if you like the stock, wait. Looks like you're going to get it cheaper over the next couple of months.
Right, so that's the take coming in on the technical front for GSFC. What's your take on this one? Ashish, do you think fundamentally a good call to take, a good stock to actually take bets on at this level?
Yes, nothing wrong with the stock. Even from September to December quarter, we have seen excellent set of numbers from GSFC. Only problem is some domestic institutions are selling this stock, which I can see from around 8% now. Domestic hold only just 2% in this stock. So around 6% equity is sold by domestic investors. At the same time, even FIs holding is quite intact in this stock. But in my view, like stock has come down already from 180, 192 at this level. So fundamentally, nothing wrong with the company. Only thing is, as sector is having issue, like all other stocks in this sector are also getting beating. So GSFC has also come down. But 110 will be a good level to average or even enter in this stock. And in 1 year, again, I am expecting 150, 160 levels here.
That's the take coming in on GSFC. But with this, viewers, it's time to slip into a short break. But don't go anywhere. We'll be right back to take more of your stock-related queries. So stay tuned. Welcome back to Buy Now Sell Now, a show where you get all your stock-related queries answered by the experts. And continuing with the same, Himen, coming to you for the next query that I have, and this is coming from Jay Krishnan from Kerala. He is holding shares of Polycab India from a price of 2,975 rupees. He's at a loss, but he's looking to average out this counter, and his investment horizon is for the next 6 to 12 months. So what's your outlook on this particular counter?
A small caveat, Shrishti. We have limited data. I mean, we have data for a few years, but from a longer term point of view, that's not enough. But whatever data we have, we remain safely ensconced in our longer term uptrend. Short term, we walked into a corrective phase. Support comes in around 2780, 2660. Medium term also, the stock looks top heavy. There is unsustainability creeping in. This range of 2800 and 3150 is going to be there for some time until it breaks on the downside. The chances of it going or breaking on the upside currently seem remote. So I'd say wait a bit. You'd probably get it lower at around 2650 and 2550.
Right. The next one is coming in from a viewer whose name is not written. Please do write your name every time you write a query to us. It's difficult for us to shuffle through or gauge who's writing to us. He wants to know about Eicher Motors, 302 shares at a price of 3,466 is the purchase price of this one. He's saying that he or she is saying that they can hold for a quarter, but wanted to know, does it make sense to average right now, Heyman, or look to exit right now and re-enter at a lower level, say around 2550?
Well, that seems like an ideal position, but I'm not sure one should advise a person who's investing to trade. The markets as such, I think it warrants otherwise. So I would say a sell on bounce. We remain in a medium term downtrend. And surprisingly enough, the longer term charts are just turning wobbly. So frankly speaking, it's a sell on bounce. We're at 2909. Uh, Assuming a market bounce comes, then we are oversold. Maybe not now, a week or two down the line. A recovery is around the corner. So 3050 is one level which I think is a possibility. 3200 seems like a far cry, but it's a sell on bounce. And after that, one can buy it back between 27 and 2750 again, because this move is going to continue for some time.
Sell on bounce coming in for Eicher Motors. But moving on, and Ashish, coming to you for the next one. The question is from Swati, and she's sitting at a loss of 20% in Ujjivan Small Finance Bank in the past 3 months. She's also looking to switch from the small banks to large banks now. So what's your advice? Hold on to Ujjivan Small Finance Bank, or rather make a switch there?
See, fundamentally, there's nothing wrong with Ujjivan, a small finance bank, first of all. Only thing is, as the banking sector is overall underperforming, and particularly these smaller banks where a lot of retail investors and traders got struck up, are creating a lot of pressure, and again, in these even fundamentally strong banks. So I suggest if you want to switch from this bank to any other bank, so you can look at more towards even Bandhan Bank or AU Small Finance Bank, which can give you better return. And in Bandhan Bank, you can make an entry at around 190 rupees at level, and AU Small Finance Bank around 550 levels.
It's coming from Neeraj Bajaj. He's writing us from Chandigarh. Ashish, he's bought Biocon at a level of 327 rupees per share. He's saying he can hold on for the next 2 years. Do you think Biocon is a good bet to hold on for the next 2 years, given the fact that it has fallen sharply from his buy price?
No, I don't think so. Biocon will be a good bet for next couple of years, and you are going to get the price. The stock is already at 52-week low, and in spite of all the positivity in this sector, we have seen hardly any movement taking place here. So my suggestion will be to exit from Biocon at this price point, and instead of this, look at more frontline counters like Lupin or even KIMS, that's Krishna Institute of Medical Science I like now. So yeah, you can buy any of this. Biocon, I'm not optimistic.
Okay, Ashish, once again coming to you. The question is from Parvinder Singh, and he's holding 50 shares of VIP Industries from a price of 700 rupees. And the other query that he has is 50 shares of Sumitomo Chemicals from 450 odd levels. What to do? He can hold on both these counters for the next 1 year, average out, exit, or hold on to these names.
I think he has not mentioned the price at which he has entered in the stock. What price VIP he bought?
He entered at 700 rupees and Sumitomo Chemicals from a levels of 450 rupees.
Perfect. Okay. So VIP again, a fundamentally good company, nothing wrong as such. Only last 1 month was not that good for these companies because again we have seen overall sell-off in mid-cap stocks. So ditto for VIP. But I think you should wait for a level of say 525 to make a fresh entry in VIP. Because now 700 levels will be slightly difficult to achieve, but 525 if you enter, I'm optimistic 625, 650 will come in next 6 months. As far as Sumitomo is concerned, again, nothing wrong with the company as such, but as sector is slightly out of fancy, so I'll not advise here to average in this stock. In my view, you can exit from this stock, and instead of this, I suggest that you can again buy another sector stock, which is GE Shipping at 620 odd levels, because I'm expecting very good set of numbers from GE Shipping in this quarter, and you are going to see 52-week high coming here in GE Shipping soon. So switch from Sumitomo to GE Shipping.
The next query is coming from Srishant, and this one is for you, Heyman. He's asking about M&M for the next 1 year. He's saying with not so good monsoon outlook, does it make sense to stay put with this one or look to exit and re-enter at a lower levels? The problem is Srishant has not mentioned his buy price for M&M already. But Heyman, what's your take on this one? Because we've seen M&M actually enter a downtrend, isn't it?
Absolutely, Cheryl. You bang on. M&M has entered a downtrend. We've had a 1, 2, 3, almost a 8 month sideways movement. Now we can label this as a distribution because we've broken on the downside, like you mentioned, Cheryl. The range was between 1200 and 1400, and we've broken down. So frankly speaking, and the longer term setup, it had a brilliant outperformance. Stock moved from 245 to 1400 over 2.5 years. That's history. So the whole year is going to go for a toss. Having said that, we are down for almost 9 weeks in a row. And despite the downgrade, I believe there's a bounce coming in. Sell on bounce. You'll get it later. Levels to watch on the upside 1200, 1240. Downside 1120, 1058.
Another stock which has been clearly in a downtrend is Godrej Properties. Narayan is holding shares of this counter from a price of 1370 rupees. He wants to know what to do next, average out or book losses at these levels. Heyman, this question is for you.
Oh, sorry. Okay. Godrej Properties, unfortunately, has come off, like you mentioned, very sharply. And frankly speaking, important levels have been uh, sliced rather easily. I mean, one would have thought 1120 was important support that should have held. It held its own for 6 months, and now we are past that. So uh, I think it's going to be a long time before the stock recovers. The next support level comes in at 960. I don't see a near-term bounce coming in. But I think, yeah, it's a sell if you have uh, let's say a 6 months or a 1 year point of view. Only if you have a longer term view would you consider to hold on to it, because I guess that's for the pain around the corner.
This one is coming in from Vivek, and Ashish, this one's for you on Aptus Value Housing. He wants to know if the stock will move up once the interest rates go down in Q4, and he's looking to buy about 500 shares and can hold for the next 2 to 3 years. Do you think that you should look at buying Aptus Value only based on this particular development, as and when, if it happens, or do you think there are other fundamental triggers as well that you should look for Aptus Value?
But who told you that in Q4 interest rates are going to come
Actually,
down?
I was also stumped for a second. I was also wondering, am I reading it right or no? Because all of us should then start celebrating, isn't it?
Yes, yes. So, so in my view, you're not going to get respite very soon, as far as stocks are concerned or your home loans are concerned. Both are going to go up only. So this is the reason why these housing finance companies are underperforming, because the higher the interest rate now, it will start pinching to new home buyers. And this is the reason, we have seen companies like Godrej Properties are touching 52-week low, and even housing finance companies are doing pretty bad. So till the interest rate will keep on rising, neither real estate nor housing finance companies can perform. So my suggestion will be to exit from Aptus value housing. In my view, instead of this, we'll better buy some cement play, which is a direct proxy to real estate development, what is happening in the industry. Along with it adds infrastructure also. So stocks like even Ultratech looks attractive at this price point. But direct real estate and housing finance is both sectors are avoided in my view.
Well, let me tell you, whenever interest rates change happens, Cheryl will be the first one to know because she's the in charge of the ticker. So apart from the whole team of 80 now, she'll be the first one to
You
know
know
this.
who to contact to know the news first then.
Well, yes, absolutely. Well, let's move on and taking the next query in line. And Ashish, once again coming to you because this question is on Dish TV. Actually, Anand from Coimbatore is holding 70 shares of this counter from a price of 88 rupees at a huge loss right now. Average, sell, what to do next?
Write off. So from 88 to
Simple
13,
answer.
now nothing can be done as such, or I don't see any trigger which may take this stock to those levels, or even I'll not able to advise this because even if you average, it will be 40, 50 rupees. And the way now things are changing from your dish TV now, all of us are watching it over internet, whatever channels we want to buy. These companies will continue to perform badly. Even I'm seeing like there's a lot of problem which will come in selling Tata Play IPO also because from Dish now market is shifting towards more OTT platforms and over internet. So Dish TV is a sale in my view and just write off this investment.
All right, this one is coming in from Sudha, and Sudha had asked this query on Friday as well, but there were a lot of stocks. She's reduced the number of stocks. So, Hemen, the three stocks that she wants to know about, one is Ujjivan Small Finance Bank, one is ITD Cementation, and the next one being PNB Housing Finance. She is suffering loss of around 10 to 20% in these holdings. What should her strategy be right now when it comes to these particular counters? Should stay put with them or look to kind of sell some of them?
Well, loss is a loss, but frankly speaking, in a market like this, if she's losing 10-20%, I think that's an achievement of sorts, looking at the way mid caps and small caps have been hammered, Cheryl, frankly speaking. But yeah, coming to Ujjivan Small Finance Bank, we walked into a corrective phase just when things were beginning to look up. One would have thought that the longer term charts had turned positive, but I'd like to use the past tense now. But things, if I were to compare the market, relatively okay. So I would suggest hold on to Given Finance. Once again, it's going to take time for this to play out. If you have a holding period of a year or more, only and only then do you hold on. PNB Housing Finance is the other stock that you mentioned. PNB Housing Finance, okay, we just started an intermediate downtrend. This is not looking too pretty. So this would be a sell on bounce. As far as ITD cementation is concerned, relatively stable. I wouldn't say it's too bad. Support comes in at 97, 90, and 79. I think this is one stock one can sort of hold. Things look better from a longer term point of view. Sherry.
The take coming in on both of these counters, but with this yours, it's once again slip into a short break, but don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now Sell Now on ET Now. Let me continue taking your queries. This one is coming from Rajiv Kumar. He's writing to us from Rajasthan. And he has 150 shares of Wipro at the price of around 514 rupees per share. He purchased this counter 2 years ago. Hemen, what should he do right now with Wipro? You know, as we can see it on the screen, his buy price is 514. Right now, the stock is hovering around at 362 rupees.
Sorry to pile on the bad news, Cheryl, but his cost doesn't look like coming in this calendar year once again. We've had a 5 months almost sideways distribution now on the hindsight, and we've broken down. So the lower top, lower bottom scenario continues. We peaked at around 740 1.5 years ago almost. and we continue to do that. So frankly speaking, no respite. Further downside seems like a distinct possibility. So once again, it's either a sell or bounce or hold for 2.5 years.
Once again, coming to you, Karthik wants to know for Reliance Industries, is this a good time to enter and buy this counter with futures of April month?
Yes, I think short-term Reliance is one of the few stocks which are showing promise. And frankly speaking, if Reliance turns weighted-wise, sentiment-wise, the whole market will turn with it. We're at 2243 in the cash market as of now. I'd suggest one can go long. Keep us up once again. These are cash market levels. He would need to extrapolate them to the futures levels. Keep a cash market stop loss of 2199. One can expect minimum 2293, possibly 2320.
Another query coming your way, Hemant. This one is from PR Reddy. He wants to know about Birlasoft, 200 shares at a price of 406 rupees per share. And also, fact, he's bought 350 shares at 268 rupees per share. He's suffering losses on both of these counters. He wants to know what should he do. He can hold for the next 6 months.
Well, Bsoft has been a woeful underperformer. That doesn't change. But it's so deeply oversold. Frankly speaking, I'm not sure if makes sense to tell him to sell, because I wouldn't say make or break, but we are at a very crucial level, 260. Last time we closed below 260 was in the weekend at 14 May 2021. So we're almost 2 years after 2 years we come to this level, which has been tested twice. So crucial levels. Either it takes a support and bounces back, or breaks and goes down. So I think keep a weekly closing stop loss of 260. If that breaks, we need to exit for the time being. I think further pain is around the corner. Fact has virtually fallen off a cliff from 390 to 202. I mean, it's just gone down one way. Oversold. But is that oversold enough for a turnaround? There aren't any important support levels till 170 and 160. So further pain, yes. And if he's going to hold, he'll have to keep these as stop losses. I don't see any respite coming in despite an oversold situation. If things need to improve, we need a weekly close about 220 for the first technical green shoots to make themselves, apparent.
Okay, sorry, Hemant, but once again coming to you. The question is from Vidya, and she's a short-term trader and holding the stock of SRF from a price of 2,270 rupees. She says she's sitting at a good profits right now. So good time to book profits, or rather hold on and some more upside is expected. Your take.
Firstly, congratulations. Making money going long in a market like this is an achievement in itself. Having said that, one of the few stocks which are looking good, higher tops, higher bottoms, numbers were good, weekly, monthly setup is good. I'd say keep a protect profit because she's in the money. Protect profit at around 2320, but the way I see it, we are heading towards 2460, and if markets recover, 2550. So it seems like a oasis in a desert. Looks good. Further upside seems like a possibility.
All right, with that, let's kickstart with the rapid fire. Then the first question is also coming your way. Hemant, this one is coming from Ashish from Kerala. Yes Bank, 30,000 shares at the price of 17 rupees per share. He's expecting this one to go right up till 20 rupees per share. He can hold till the month of June. What's your advice?
Buy only if you're holding for the price sell.
Okay, Ashish Rakesh is holding 700 shares of Rallis India from a price of 196 rupees. Wants a long-term advice on this one.
Again, the stock is not going anywhere. It's quite weak also. So my suggestion will be to exit from this stock.
Okay, 150 shares of Axis Bank at a price of 860 rupees per share. This is what Anjali is holding. Can she average? Ashish.
Yeah, she can average at 810 levels, not now. Just wait for some time.
Okay, Ashish, once again, the question is from Rajesh, and he is holding shares of HDFC AMC from a price of 2,600 rupees. He's looking to average, but what will be your advice? Needs a medium to long-term outlook.
No, I suggest exit from HDFC AMC, and the way this debt market related development, etc. have come. I don't think so AMC stock will do well in short term. Instead of this, I'll advise you to switch to India Mart, which can give you better returns.
Okay, this one's coming from RK Ahuja, Tata Elxsi, RCF, Polyplex, all of them suffering over 20% loss. What should he do? He's a long-term investor. Ashish?
So Tata Elxsi exit. Instead of this, can swipe this with KPIT. Which are other stock?
There's RCF as well as Polyplex.
Okay, so RCF exit. Instead of this, you buy NFL, which can give you better return, same field. Polyplex exit. Instead of this, you buy Uflex, which can give you better returns.
Okay, Hemin, coming to you for the next one. Question is from Ranganath Rao, holding 200 shares of Hindustan Copper from a price of 125. Hold or average? Hemin, this question is for you.
Hold is the call. Okay, Pratisha from Muscat has AB Capital at current market price. Makes sense to continue to hold on to this for the next 6 months and also look to accumulate. Hemin, what's your view on AB Capital?
I'd agree, but not buy more than this. Support comes in 139, 157, decline 4 target of 171.
Okay, but with this fears, it's time to wrap this edition of Rapid Fire as well as Buy Now Sell. Now, Ashish as well as Hemin, thank you so much for joining us today on ET Now and helping all our viewers with their stock-related queries. But with this viewers, it's a goodbye from me and Cheryl and the entire team who put the show together. But don't go anywhere. Right after this short break, markets at noon will be taking the action ahead.